Okay, let's unpack this. This week we're doing a deep dive into the S&P Sri Lanka 20 index, specifically that first week of August, August 1st to the 8th, 2025. And our goal really is to figure out why this key index, the one institutional investors watch closely, dropped quite a bit, even when, well, some of the big economic news headlines look surprisingly good. It's a bit of a head scratcher, isn't it?
It absolutely is. And what's really fascinating here is just how complex the signals were. So the S&P SL20, that's Sri Lanka's top 20 companies, right? They're blue chips. It was actually set up back in 2012 using global standards specifically to, well, boost confidence. Yet here we are, end of this short trading week, and it's down 1.2%, pretty noticeable. And that really contrasts with the wider index, the all-share price index, the ASPI. That showed, more resilience. It was only down 0.4%. So it clearly suggests the bigger players were thinking differently.
Yeah, and the puzzle kind of deepens when you layer in that positive economic news you mentioned. You might have caught the headlines about customs revenue, just record-breaking. A historic ORIS, 231 billion collected in July alone. Get this. They beat their annual target by August 1st.
Incredible numbers, yeah.
And on top of that, a little bump in foreign reserves, too, up $64 million in July, reaching $6.14 billion. So you see these strong signs, right? Why the grumpy market reaction, especially from the index tracking the country's economic heavyweights.
That really gets to a core question, doesn't it, about what actually moves markets. If you connect the dots, look at the bigger picture. It seems the market was pricing in future risks, specifically the potential long-term fight-out from earlier interest rate cuts and liquidity injections by the central bank, the CBSL.
Ah, okay. So past actions casting a shadow.
Exactly. Even though the CBSL kept the main policy rate steady at 7.75% in this period, to manage inflation, some analysts had already been warning. They were saying those previous moves might weaken the country's ability to build up reserves and, crucially, make it tougher to handle debt down the line.
I see.
So the market wasn't just cheering the good news. It seemed much more focused on these, let's say, underlying vulnerabilities, potential policy risks. And that led to this very cautious, almost fragile feeling among investors.
That makes a lot more sense now. So, okay, let's follow the money then. Who is buying? Who is selling? What did the flows tell us about who was driving this caution, particularly for the S&P SL20?
Well, interestingly, foreign investors were actually net buyers, but only just. A modest inflow, eyes 27 million.
Which is tiny compared to turnover, right?
Precisely. You compare that to the average daily turnover of nearly ours, 3.9 billion.
Yeah.
That's a drop in the bucket, like you said. So that more significant 1.2% drop in the S&P SL20, that tells you domestic selling was the main driver.
Ah, so local institutions, high net worth players.
That seems to be the story. They were the ones hitting sell. And even where you saw some specific positive action, like Galley-Face Capital Partners and Diversified Financial saw a nice jump, that wasn't nearly enough to lift the overall index mood. It really signals caution, maybe a risk aversion, coming from those larger influential domestic players. They're looking ahead, maybe seeing bumps in the road.
Right. So it's less about today's good numbers, more about anticipating tomorrow's challenges and perhaps waiting for signals from the central bank on the long-term strategy.
Precisely. Yeah, the S&P SL20's performance this week really underlines that disconnect. You have tangible improvements, like that customs revenue, but it's not enough, not yet anyway, to build sustained confidence. The market's behavior points to this forward-looking view, this assessment of risk, where the potential long-term consequences of policy choices seem to be outweighing the short-term good news. Stark reminder, really. Markets often run more on sentiment and future expectations than just the current data points.
Which brings us to a final thought, something for you listening to consider. What kind of consistent, transparent policy signaling does the Central Bank of Sri Lanka need to provide to really bridge this gap we're seeing, this gap between positive headlines and that deep-seated investor worry, and ultimately, lead to a market recovery that feels both sustained and confident, something to ponder?